Hello, in this quick video I'm going to be answering a question that we were asked by one of our Hurst Signals subscribers. It's a really important question, which is why I thought I would record a quick video instead of typing a long reply. That way we can spread the knowledge around a little bit. As always, before we take a look at anything, I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at this question. The question had to do with the Australian to US dollar, which has recently had a change in direction. So a few days ago, the Hurst Signals system was identifying the opportunity of a short trade, and it has now changed direction and it's identifying the opportunity for a long trade. And so the question was, why has this happened? So let's start by taking a look at the current recommendation for the Australian to US dollar. Here I have open the email. This is last night's email, and as you can see, here is the Australian to US dollar, and this is the opportunity for the 14th of August, which is today. And you can see that the trade recommendation or the opportunity is for a long entry. It's a C category long entry, okay, at those price levels with the T1, T2, etc. Underlying trend of +1. So that's the opportunity that the system has identified. In order to understand that opportunity, we need to, of course, take a look at the charts. So let's take a look at the chart of the Australian to US dollar. Here it is, and we're going to start with the 3-month chart. Here at the top again you can see the C category long entry, and if we have a look at the analysis on the chart, you can see that there was a 20-week cycle trough which has been identified on the 3rd of August. Now there's something that you need to bear in mind whenever you are considering your trading opportunities, and that is the principle of commonality, which is the way in which financial markets around the world are tending to move together. They're being influenced by the same cycles. And the Australian dollar against the US dollar is a really interesting one because it bears a great deal of commonality, if you like, with stock markets, which, as you know, formed a really big, important trough in March of this year. And so let's quickly take a look at the overview for the Australian dollar. There it is there. And you can see that the overview is showing a 54-month cycle trough, which is the magnitude that I think the stock markets formed, the magnitude trough that they formed in March of this year. And you can see it is also in March of this year. It looks like it's pretty much at exactly the same time as the stock markets formed that trough. You will also notice, let me clear that arrow, that there is a 9-year cycle trough over here back in the beginning of 2006. So just over 4 years ago. And if that was a 9-year cycle trough, then of course the first 54-month cycle trough is this cycle that we have seen take place over here. So the first thing that probably occurs to you as you look at this is that it might be possible that in fact this trough over here, being lower than this trough in 2006, might actually be a better position for the 9-year cycle trough. Now, if that kind of thing really disconcerts you, then it shouldn't, because you need to understand the complex way in which Hurst cycles work together. It's a very big, complex puzzle with all of these harmonically related cycles. So we have been operating for some time under the impression that the 9-year cycle trough formed in 2006, and we got a good boost out of that trough, which lasted for a good 2.5 years, and then we had the move down into the next 54-month cycle trough. The possible move of the 9-year cycle trough from 2006 to 2020 doesn't really make a huge difference to our trading, particularly when our trading involves looking at the 20-day FLD. So It's quite possible that the trough in March of this year is not in fact 54-month cycle trough, but is in fact a 9-year cycle trough. That would certainly explain the tremendously sort of bullish move that we have seen, not only in the Australian dollar, but also in stock markets, of course, which many of them are in the process of achieving new highs. Some of them have already formed new highs. So we've had a lot of bullishness. That's really the point that I wish to make here. And if we go back to the 3-month cycle trough, you can see there is the 20-week cycle trough. Now, if you watched my recent market update, which I posted last week, I think it was, I was speaking about the fact that the 20-week cycle trough was due in stock markets, and of course also due in the Australian dollar, because it had a very similar big magnitude cycle trough at almost exactly the same time as stock markets around the world. And so this 20-week cycle trough has certainly been due. You can see, according to today's chart, or the chart that was uploaded last night, that 20-week cycle trough formed, according to this analysis, on the 3rd of August. But now when we're looking at this chart, and we need to consider the analysis, because we need to have confidence in the analysis if we're going to start making trading decisions. Looking at this chart, how confident are we in this analysis? How obvious is that 20-week cycle trough? I've got to say it's not obvious at all. Price came down, it dipped down just for literally 2 days, formed that trough and then bounced back up again. Is that analysis definitely correct? Not definitely correct. Of course, Sentient Trader does its best to perform a really good analysis, but it's not always correct. Is it possible that the 20-week cycle trough maybe should be placed somewhere slightly differently? It is possible. Perhaps that 20-week cycle trough should be placed over there. Perhaps the 20-week cycle trough is still coming. Why has Sentient Trader placed that 20-week cycle trough there? Well, look at the number of days that have elapsed since the most recent 80-day cycle trough. The 80-day cycle trough has also been positioned in a fairly dubious position over here towards the end of May. Not a perfect position for that 80-day cycle trough. But you can see 83 days have elapsed. The average length of an 80-day cycle is in fact 68 days. And if you haven't grasped those basic concepts and that confuses you, you must make sure that you cover the basic material so that you understand the concept of an average cycle length and so forth. So the average length of an 80-day cycle is 68 days. So this cycle has been running now for 83 days since the last 80-day cycle trough. So this 20-week cycle trough was definitely overdue at this point, and that is why Sentient Trader has positioned it over here. You can see the recent average wavelength of the 80-day cycle was in fact 55 days, or has been 55 days, I should say. So this sudden sort of stretching of the most recent 80-day cycle to be longer than 83 days, it's getting a bit too long, which is why Sentient Trader has positioned the 20-week cycle trough over here. So the analysis is difficult. It's slightly questionable. Let's consider something else about this analysis. Look at the composite model line, which matches price action fairly well up until the beginning of June. But since the beginning of June, the composite model line has been moving down and the Australian to US dollar has been moving up. You have a direct contradiction. Why is that? Well, the composite model line is based upon the analysis information, and so having positioned the 20-week cycle trough over here, the composite model line indicates that those cycles need to have been influencing the market to move down, which is why the composite model line is moving down. However, price was clearly moving up. We have a lot of conflicting messages in this analysis. Are you feeling confident about making this trade? Not very, I must say. However, there is something else to consider, which is the fact that the analysis has really been very difficult because of the fact that the market has been so bullish. This price action has been extraordinarily bullish. A normal 80-day cycle you would expect to go up and then come down in a sort of an M shape, but it's just been, persistently bullish, which means that there haven't been many clearly defined troughs forming in this market. And that is a cycle analyst's nightmare, when you don't get clearly forming troughs in the market, when the market tends to just go in one direction, which is what it has been doing for 6 or 7 weeks. It's been really just moving very strongly in that direction. It hasn't been forming any clear troughs. And so if we were to consider making a trade, and let me go back to the overview, because it's very important to always consider the overview. What kind of a trade are you interested in making here? Well, the market has been going up steadily and more strongly than it has done for many years in this market. So I'm not overly anxious to get into a short trade, honestly. The market is clearly very bullish until I see clear signs that it is turning down. And so the current recommendation, as I have mentioned, is of course for a long trade. And so that might be a long trade worth taking into consideration, even though the analysis is a little bit uncertain. Here is the 6-week view, just as a matter of interest, and here we can see that 20-week cycle trough, which was certainly the clearest trough that formed in this market since pretty much the end of June. And so it's not an impossible position for the 20-week cycle trough. However, since that trough formed, and notice how it formed actually as price was straddling the 20-day FLD. What does that mean? Well, if this was the 20-week cycle trough that formed on that day, and price was straddling the 20-day FLD at that time, it expresses the extreme bullishness of the market, because the 20-week cycle trough usually should happen after a bearish sequence of interactions whereby price crosses down below the 20-day FLD, and usually a 20-week cycle trough would form well below the 20-day FLD. The fact that it potentially formed at the level of the 20-day FLD reiterates for us the extreme bullishness in this market. And so the system that is identifying the interactions says, well, the A category interaction has to be right here, right? When it sort of dipped down intraday and then crossed back up above it. And therefore we are now, or the price I should say, is now finding support at the level of the 20-day FLD. And let me just zoom in on this chart. I hope you know that you can zoom in on these charts simply by clicking on them. And we can zoom in even more. There we go. That's quite nice and big. You can see how price crossed up above the 20-day FLD over there after a brief moment beneath it, and it has now come down and is finding support at the level of the 20-day FLD. It has slipped just slightly below it yesterday because the 20-day FLD is moving upwards, but certainly that could well be an example of price finding support at the 20-day FLD. And so a long trading opportunity is certainly one worth considering. But now the subject of this email is how do you deal with the fact that Hurst Signals is showing a change in direction. So what is that change in direction? What was the Hurst Signals system recommending previously? Well, if we go back by 2 days, so this is the email for the 14th of August, and if we go back to the email not on the 13th, because it was also recommending a long trading opportunity at that time, but I think if we go back to the email for the 12th of August, there it is, Australian to US dollar, and here you can see the recommendation is in fact exactly the opposite, an F category short entry. So the point about this question is that 2 days ago Hurst Signals was recommending a short entry, and it was an F category short entry, and now 2 days later is recommending a long entry. What on earth has happened? Okay, and it's a very important question, so let's take a look at this. Now fortunately we keep a record of all of the charts that are posted by the Hurst Signals system, just so that we can go back and test for inconsistencies or check for inconsistencies and so forth. Here we go. So this is in fact the chart that you would have seen. This is the chart that was up on the system 2 days ago. And you can see here the F category short trading entry. Now, why was the system identifying a short trading opportunity 2 days ago, and now it's identifying a long trading opportunity? We've already discussed why it is now identifying a long trading opportunity. So the question is really, why was it identifying a short trading opportunity 2 days ago? The answer is, and it always is, because of the analysis on the one hand and the identification of the interactions between price and the 20-day FLD on the other hand. So let's consider those two factors. First of all, the analysis. You can see this analysis from 2 days ago is showing a circle and whiskers and nest of lows for the 20-week cycle trough, which is clearly overdue. You can see how the actual circle for that 20-week cycle trough was in the second week of July. Okay, so we are now in the second week of August, so that trough, according to this analysis, is now pretty much a month overdue. And there we can see the count, the number of days. I mentioned it was 83 days on the other chart, and so now, on this chart 2 days ago, it's only 81 days. Nevertheless, it's clearly an overdue trough. So what is the analysis telling us? Well, the analysis is telling us that this 20-week cycle trough is overdue. Why hasn't CentiTrader found it? Well, because of the reasons I've already mentioned, that it can't really clearly identify a nice clear trough in this fairly bullish price movement over that time period. Of course, it eventually did 2 days later, which turned out to be this day over here. And there's the nest of lows, so it's saying, okay, the 20-week cycle trough occurred over there. But 2 days ago, it didn't have the confidence to identify the 20-week cycle trough over there. So the analysis is telling us that the 20-week cycle trough is very overdue. Now let's look at the identification of the interaction between the price and the FLD. So, following the 80-day cycle trough, we expect a full A, B, C, D, E, F, G, H category sequence. Something interesting happens in this chart over here. We get the A, B, C, D, E, F, and then suddenly there's no G or H, and suddenly the system is saying, here's an A category interaction. Why is that? Well, there's an interesting interplay between the analysis and the system that identifies the interactions. Sometimes the system that identifies the interactions will overrule the analysis, if you like, and it will say, okay, I know that you haven't yet been able to identify this 20-week cycle trough, but looking at the sequence of interactions, I think that it is likely that in fact the 20-week cycle trough occurred over here, and therefore this is an A category interaction. Okay, therefore this is a B category interaction when it comes back to, and let's just switch to the 6-week chart. It's all getting a bit small there. So here is the 20-week cycle trough, the circle for the trough. And the system that's looking at these interactions is having a bit of a hard time because the interactions between the 20-day FLD and price have been scarce. As you can see, the 20-day FLD has done nothing but provide support for some months now, I think, or certainly many weeks. Okay, so the system that's identifying the interactions has said, okay, this is an A category interaction. So I think that actually probably that doesn't work as a G and then an H. No, I can't see a G and an H in there. So I'm jumping straight to an A category interaction. And B category interaction is where price comes back down and finds support at the level of the FLD, which it pretty much did over here. So that's the B category interaction. C category interaction seems fairly poorly placed, in my opinion, but it should be kicking up over here. The D category interaction is where price crosses down below the FLD, which it did very poorly over there. You can see how the system is struggling to identify these interactions clearly. The E interaction is when price broke back up above the FLD, which it sort of did over there. Therefore, the next interaction, according to this analysis, is the F category interaction. That is why it tells us here the next trading opportunity is an F category interaction. But we need to look at this and consider it carefully. What is this actually telling us? The identification of the sequence of interactions is telling us clearly that this overdue 20-week cycle trough probably has already formed in the market. And therefore, in terms of our interactions between price and the 20-day FLD, we are now already at the next F category interaction as price comes down towards the next 80-day cycle trough. Okay, so that is the trading opportunity. So we have a really unusual situation here where the analysis has a very overdue trough. The system that identifies the interactions between price and the FLD has been really struggling to identify those interactions because they have simply not been very clear. And it is getting way ahead of the analysis. You can see the analysis is still looking for a 20-week cycle trough, whereas the interactions between price and the FLD are already looking ahead to the next 80-day cycle trough over here, expected sort of towards the end of August. But that's on the assumption that the 20-week cycle trough has formed in the market. So this is the trading opportunity that was recommended 2 days ago. And this is a really good reminder of the fact that these trading opportunities that are identified by Hurst Signals should never simply be read off your email and typed into a trading platform. They need to be considered. So I hope that when you came and looked at the charts, and in fact the person who sent this email said that they did not consider the short trading opportunity seriously, which was certainly the right thing to do. Because under these circumstances, do you consider a short trading opportunity really seriously? I don't. We've seen just a moment ago the overview chart, and I can show you the overview chart that we were seeing 2 days ago. This is the overview chart from 2 days ago, 11th of August. The analysis, you have that strong bullish move as we have already discussed. This market has been very bullish. I'm not saying that you never take short trades when the markets are bouncing out of a 54-month cycle trough. Of course you do, but you wait for some indication that the bullishness of the really longer cycles has begun to fade a little. It's waning. The bullishness is getting exhausted. Now, if you have a look at the many clues that are on this chart in terms of the bullishness or bearishness of this market, you can see on the 6-week chart that over the past 6 weeks, price has failed to get below the 20-day FLD. Can you see that? Over a 6-week period, during which time we were expecting a 20-week cycle trough to form. So, in other words, that 20-week cycle trough, which almost certainly did form at some time within this period, formed at the level of the 20-day cycle FLD. I'm probably mixing up my days and weeks. It's all getting a bit complicated, but that 20-week cycle trough almost certainly formed at the level of the 20-day FLD. And that means, as I have already explained, that the market is currently very bullish. So yes, when an F category trading opportunity comes along, we might have the opportunity to catch a short trade. But there's been so much bullishness in this market that I certainly wouldn't be sort of jumping into a short trade. I'd be watching it a little carefully. I would probably let price, cross down below that FLD, and I'd want to see some other indications, such as, it definitely breaking below the lows of the past several days. I'd want to see some strong indications of bearishness before jumping into a bearish trade. Of course, an F category short trading opportunity should be a good one, but when you have a very long cycle trough that has formed recently in the markets, then it's certainly something to be treated with caution. Now, just a note about that. The underlying trend here is considered to be -1. That's calculated on the basis that, of course, the 20-week cycle trough has already formed, and not only has it already formed, but that we are already at the F category interaction. In other words, not only has the 20-week cycle trough formed, but also a 40-day cycle trough has formed over here. And on that basis, we are now heading down into the first 80-day cycle trough, and of course there is the 40-week cycle whisker, which is looming ahead. If you look at my most recent market update, you know that stock markets, and of course because of the commonality between stock markets and the Australian dollar at the moment, certainly something worth keeping an eye on. So, this trading opportunity is on the basis of several assumptions which might turn out to be false. And so let's get back to trying to really answer the question. And that question was, why has the Hurst Signals system changed direction in terms of its trading opportunity that it is identifying? And the answer is, I could have made this video 30 seconds long, because the answer is actually very simple. The reason why the Hurst Signals system will sometimes change direction, and it doesn't do it very often, I should point out, but the reason why it will sometimes do it is because of two things. One, the analysis in the chart has changed, and two, the identification of the interactions between price and the 20-day FLD has also changed, therefore resulting in a change of direction. Now, I should point out that very often when the analysis changes, it changes in such a way that the identification of the interactions between price and the FLD will not result in a change of direction in the trade. So in other words, if the system was recommending an A category trade, it might just change its mind and say it's now a C category trade, or it's now an F category trade. Okay, I beg your pardon, an E category trade. Okay, so those are all long trades. All right, so that's not a change in direction. That kind of thing you will see fairly often. I don't know if often is the right word, but you will certainly see that happening on the Hurst Signals system. So you will get into an A category trade, and then the system will say, actually, we think this is a C category trade now. Fine, it doesn't really change very much. You might need to recalculate your targets and your stop losses, but all that it means is that you're still in the correct direction trade. And of course, if the system is recommending a short trade, such as a D category trade, then it might change its mind and say, well, actually, no, this is an F category trade, but it's still a short trade, so hey, that's good news. Or it might say, actually, we think this is an H category trade. Again, there's no change in direction. So the change of direction is fairly unusual. And a change of direction occurs in a situation such as we've just seen in the Australian dollar against the US dollar, which is a change in not only the analysis but also the interpretation of the interactions between price and the FLD. So I really hope that you found that video useful. It's a very important reminder that the Hurst Signals system is about identifying trading opportunities that need to be considered by you, the trader. You need to look at the charts. You need to consider the analysis. You need to ask yourself, is this looking like a good, clear analysis? There are so many trading opportunities out there that it's really not necessary to jump at every single opportunity that you find, particularly when those opportunities are not particularly good ones, or when the analysis isn't clear. Step aside from that instrument. We are now making all instruments available to you in your dashboard, so you can choose different ones and you can consider them and decide which ones you want to have included in your nightly email. And so I'd encourage you to do that. Take a look at other instruments. When the analysis isn't clear, or when the identification of the interaction between price and the 20-day FLD is not clear, or when price is just not crossing that FLD, it's not interacting with it, it's just staying above it, as has been the case in several markets recently, then that's an important consideration. The markets are bullish until they turn bearish, but they haven't turned bearish just yet. So I really hope you found that video useful. Thank you for your interest in Hurst Cycles, of course, and for being a Hurst Signals subscriber or Sentient Trader user or Hurst Cycles for MT4 user. So I look forward to seeing you in the next video.